Well, we're going to get going here this week. Markets are a little bit slow today, and spring is in the air. But we think there's some things in these markets that that are really getting our attention in here. And the one thing that we put a big focus on is looking at where the world markets are and where the world markets are relative to where the U.S. is. And on this chart here, and we had it on last week's report, is we're showing the difference between U.S. and Brazil beans over the last 6 weeks. And as you can see, in early February, you had Brazilian beans at a 45-cent discount to where the U.S. was offering them at the Gulf. And here late last week, that spread got out to $1.10. I mean, in the last week and a half, that range has really been from that 85 cents as a low to $1.10. And what we think we really got to notice with this is when we're getting to $1.10 a bushel, we are getting close to the point where it makes economic sense to import beans from Brazil into the U.S. If we have to pick an exact number on what we think that spread needs to be, we're going to go with $1.25. Okay, so if the port price of beans in Brazil is $1.25 less than the U.S., at that point we could get some rumors of potentially importing beans from Brazil into U.S. crushers in the southeast U.S. Now, as we quick look at a November bean chart, this is a continuous bean chart over the last 10 years with the red line on there being $11.40 a bushel. And why I picked that $11.40 level is an $11.40 bean put runs around 40 cents. That gives you a price floor of $11 a bushel. Our concern with beans this year is volatility. Okay, that is our number one concern. I can give you a scenario in here with weather where we could see $15 or $16 beans. I could also, write a scenario where we could get beans back to $9 this fall with increased acreage, and then the planned 3 to 5% increase in South American acreage this next year. Volatility is going to be high. What's important to remember is volatility both goes up and down. When I get over to the corn market quick, we're comparing U.S. prices to Argentina corn, and we're not going to import corn in to the U.S. Okay, that is not going to happen. But it's important to realize from early February, when Argentina corn was a 4-cent premium to the U.S., to here the last couple of weeks, it runs a 25 to 26-cent discount. World buyers are heading to South America. This tells us that the Argentina crop is in decent shape in here right now, and that the crop issues hyped up by the media are probably a little bit overstated. And the other thing that really sticks out to us on the corn side of it, and this is even with beans, is when we go back to 2019, the market started trending lower, and they trended lower that year because the world prices were getting cheaper. Now, as I look here at a weekly December corn chart, I just put out a hedge idea out there about buying a 450 put and selling a 550 call. Why we like this position on new crop corn, and it is a marginable position, is we just don't think the likelihood of getting above 550 on corn is very strong, okay, given our current supplies. And the fact that once we get corn futures above 5.25, we tend to see demand soften. Okay, now where we're going to have a lot more uncertainty on corn compared to beans on the production is we're really working with two crops over the next 6 months. The Brazil crop, the second crop, is about 75% planted right now, and that is running behind normal. And so we got the whole Brazilian growing season to look forward to over the next 2, 3, 4 months. And then we also got the U.S. growing season coming up as well here too. So, we've got a double weather market coming up on corn, which is going to give some added volatility. But on the same hand, though, on getting a sustained move above 550 is going to be tough, especially given the current wheat supplies. Now, and I just want to switch gears over to wheat a little bit and not make a big reference of it. But I think this is something that's really important to look at. This is the spread difference between KC wheat and corn futures. And that red line going across the bottom is when KC wheat is only a 25-cent premium to corn. And when you start seeing that spread get below 50, and it's at 45 cents right now, you start to see wheat moving into feed rations. world wheat supplies are plentiful, okay? And so as long as wheat is cheap relative to corn, okay, that should offer this wheat market some support in here right now. If wheat is going to go higher, it probably needs to be led by corn. When I get over to Chicago wheat, I just put a horizontal line on this chart at $6. I mean, we think guys should look at budgeting dollars and buying some $6 wheat puts. The wheat crop is in decent shape, and it's really a global market out there, and we're not competitive on the world market. Again, if corn holds together here, wheat probably won't break that much. But if we don't have the crop issues here in the U.S. or Brazil, and with Argentina offering cheaper corn, this corn market could be set to roll lower. You could also look at a fence position on wheat, okay, by selling a $7 call to bring our costs down. But we just think that this wheat market, and you look at Chicago even compared to KC, Chicago is probably a little bit overvalued that way. As we look to the end of the month, we got a big March acreage and stocks report coming out here, at the 31st. And right now we're starting to get a little bit more debate on what kind of acreage are we going to see. And this is the thing is we went back to December where we first put out our acreage projections, and then the USDA had an outlook conference here in mid-February. We just want to give you some things to think about in here in mid-March and before we get to the end of the month. What a big point of ours is when you look at the last 10 years and you combine corn, soybeans, wheat, and prevent plant acres, 6 out of those 10 years, that combination was between 230 and 232 million acres. We just believe that is a good target to look at for a total. 2 of the years we had the acreage below 230 million acres, and then there were 2 years when we had acreage actually above 234 million acres. So when we're looking at our acreage projections in here, we're looking at the combination of these 4 to be between 230 and 232 million acres. Now we're just going to go through a few different scenarios on the acreage side of it, and it seems we could get a contest in here right now on how big is big on corn and soybean acres. So if we just start on this chart over on the left on what we had a year ago, we had 90.8 million acres of corn, 83.1 million acres of soybeans, 44.3 of wheat. Our total corn, beans, and wheat were 218 million acres, and you add in the prevent plant, we're up at 227.5 million acres. Now the USDA just came out with an outlook conference here in February, and what they did there is they pegged corn acres at 92 million acres, soybeans at 90, wheat at 45 for a 227 bushel total, or for a 227 million acre total. We figure average prevent plant to 3 million acres. That gets our total corn, soybeans, wheat plus prevent plant at 230 million acres. Now, as we jump ahead to the March 31st report, we want to kind of give 2 different scenarios in here, maybe a low acreage mark and about as high as it could possibly be. So if we're going to go with a low acreage mark, we're going to lower the corn acres from the February outlook conference down to 91 million acres, keep beans at 90 million, our total corn, beans, and wheat at 226, prevent plant at 4, and we're at 230 million acres. Now, if we just focus on the corn bean change, what was made of a big deal in February is we've never planted 182 million acres combined before. I'm not disagreeing with that figure, but I believe there's a potential because we have the price incentive. So now as we look ahead, what's the biggest acres could possibly be? Well, the way we have it figured out is we could potentially get the combined corn and soybean acres up to 186 million acres. And we'd put the corn acres at 93.5, bean acres at 92.5. You keep wheat the same at 45 million, and you've got combined corn, soybean, wheat acres at 231 million acres. In order to get it that high, that prevent plant has got to be exceptionally low. So we got prevent plant then down near a record low of 1 million acres, and that gets our combination up at 232 million. We just think as we go on to this end of March report that you're going to look at this combined corn and soybean acres somewhere between 181 and 185, 186 million acres on the top side. and then spring weather is a determinant from there. Now, as I want to finish up, I mean, right now that March 31st stocks and acreage report is a focus of the market. I mean, it's almost a little bit too early to trade on weather, and probably the reason why we're more of in a range-bound trade in here right now. I mean, major support levels have held, but yet there's nothing bullish in here to take us sharply higher. This week we've seen some pressure on the new crop contracts. I think it's come from the moisture that we've seen, especially in the Western Corn Belt or the Western Plains states, okay? If we're going to have a major rally over the next 2 months, it's going to have to come from a planting delay here in the U.S. or issues with the second corn crop in Brazil. I think right now over the next 2, 4, 6 weeks, you want to implement your plan, okay? I want to get so many bushels cash contracted, take advantage of these prices. And if I'm going to hedge with a futures or options, what kind of risk do I want to have in place, okay? As we look towards the summer weather market, we're going to have volatility. What we're afraid of, okay, and what we're hearing from producers is everyone believes that the volatility is just for a higher market. That's not really the case. Volatility can be on a lower market, as well. So we need to keep those things in mind. If you have some questions, I'd be more than happy to answer them. Again, send us an email for suggestions on topics. We look forward to doing these things each week. And like I said, you have any questions or so, we're more than happy to answer them for you. Well, it doesn't look like we're going to get any questions this week. Doesn't surprise me because you kind of got a slow market in here right now. Again, thanks for tuning in, and we'll see you next Tuesday.